Hello friends, today we want to talk about how to spot and trade liquidities, specifically buy side liquidities and sell side liquidities. How to spot and trade buy side liquidities and sell side liquidities. Before now, I've made a video on how to spot and trade liquidities like the banks. All right, this video on my YouTube channel, try and check it out. All right, so you can understand the concept of liquidity. That's the first video I made on the concept of liquidities. Okay, I explained the types of liquidities and how to trade liquidities like the bank. But today, I want to specifically focus on how to spot and trade the buy side liquidities and the sell side liquidities. This is key and very important if you are to stay on the right side of the market. Okay, if you want to trade like the banks, the high financial institutions, and the hedge funds. Okay, so I want to explain this to you, and the earlier you understood this, the better your trading will become. All right, to become on the right side of the market. So this is very, very important. I want you to watch every bit of this video, because this could be the missing link in your success or your profitability in the forex market. So liquidities, I explained what liquidity is, but I want to do that again. Liquidity is actually retailer stop losses. Liquidities means retailers stop losses. Where you place your stop loss as a retailer is actually where the institutions want to first of all take out your stop loss and then go in their intended direction of the market, where they want to go. If they want to buy, they will first of all sell in order to take out your stop loss and then buy. That stop loss, those stop losses forms fuel for their trade. If they want to sell, they'll first buy, take out your stop losses, and now sell. So liquidities are retailer stop losses, and it actually means more money for institutional traders. Liquidities mean more money for institutional traders. So if you have to be careful where you place your stop losses. You have to be sure that it is not a point of liquidity for the banks. It's not an area of interest for the banks where they want to take out your your stop losses, or the money you have placed there. Okay, so before they go in the intended direction. All right, so I've actually explained last time the types of liquidities in that previous video I told you about. Please kindly check that video. That should be a foundation for this particular video. All right, this is more advanced, because that video is just the elementary form of liquidity, but this one is more advanced now. All right, so with the types of liquidity, I explained that we have range liquidity, we have trend line liquidity, we also have equal highs and equal lows liquidity. All right, we have trend line liquidity, we have range liquidity, we have equal highs and equal lows liquidity. You need to know how to spot each type of liquidity. You need to know how to spot it in your trade, and you need to know how to trade with the banks, trade with the with the hedge funds, trade with the financial institutions, big financial institutions. All right, you need to know how to trade with them. So if you do not know how to trade with them, you're going to be on the wrong side of the trade. Now, in addition to this, today I want to talk about a more specific type of liquidity, another classification of liquidity, which is the buy side liquidity, the BSL, and the sell side liquidity. Now, this buy side liquidity is like the equal highs, okay, while the sell side liquidity is like the equal lows. All right, so the buy side liquidities are those liquidity, the equal highs in the line of a buy trade, where the hedge funds and the big financial institutions want to take out in order to fuel their trade further. All right, the sell side liquidities are like the equal lows that has to be raided in order to get more momentum for their trade. Once liquidity is taken out, you discover that the trade moves faster. All right, there is a fast momentum. Liquidities are taken out with speed, with a high volume and high momentum, because more money has been taken out. More money from the retailers are being swept. Liquidity pool acts as fuel for institutional traders in their trades. All right, so you need to keep this concept in place, that if you cannot spot the liquidity in the market, you will become the liquidity. If you cannot spot the liquidity, you will become the liquidity. Just bear this in mind. All right, if you cannot spot, each time you open your chart, look for the liquidities, check the liquidities, know where the liquidities are placed, check and know where the buy side liquidities are and the sell side liquidities are, and know, so that you can be on the right side of the market. Because if you cannot spot the liquidity, in the market, you will become the liquidity yourself. All right. So now you need to keep also another concept in mind about getting high probability supply and demand zones. Most times you are here, my mentees and several traders say that supply and demand zones don't work. No, that supply and demand zones are like trading against the trend. No, it's not necessarily trading against the trend. It's like trading with the banks. All right. So because your supply and demand zones fail most time because you do not trade the high probability supply and demand zones. Okay, I've actually made a video on how to trade the high probability supply and demand zones. All right, so I've made that video here. You can see this video, how to trade, in my channel. Try and view that video. Okay, it will help you how to trade the highest probability supply and demand zone that you should trade. So now we have also, there's this concept I've discovered, and I wish I've over the years of trading, I've discovered this concept and I've shared it here. I say high probability supply zones are usually those zones that are resting above liquidity, while the high probability demand zones are those zones that are resting below liquidities. Why is this so? It is so because once the liquidities are taken out into a supply zone, there is a fuel for the trades of these institutions, financial institutions, and they will now buy. Though first of all, if the institutions want to go in a particular direction, they want to go in the opposite direction initially in order to trap sellers. Sorry, not to only sellers, not to trap the retailers. If institutions want to sell the market, they will first of all buy up the market in order to trap retailers to buy. And then when they have placed their stop losses, they raid their stop losses. Or what is called a stop hunt. All right. So when the institutions want to buy, they first of all sell in order to trap retailers to a sell position, and then they now buy up the trade. So that is to say that high probability supply zones are usually resting. Try and view this video, please. Try and view this video. It will help you. I explained it clear in this video. The highest probability supply and demand zones that you should trade. All right. So high probability supply and demand zones are usually resting above liquidities, and high probability demand zones are usually resting below liquidities. Now let us see this trade. I want to talk more about the buy side liquidity and the sell side liquidity. Now look at this trade setup I posted yesterday in my mentees group. All right, I have a separate mentees group, VIP groups, where I mentor traders. All right, now if you want to be in that group, you can send me a DM. Okay, my contact is in the description box of this video. All right, and I would add you to that group. All right, so I mentor traders there. I also give setups. I give setups, high probability setups in that group. Now look at this trade. Now this is a GBP USD 15 minutes. This is sell side liquidity, SSL. All right, so retailers may have placed their stop losses here. They think this is like a equal low. All right, equal low or double bottom. All right, and they must have placed their stop loss right here. And I know that as institutions, they would want to step into this zone, raid this stop loss, this sell side liquidity, raid it before going up for a buy position. All right, I spotted this and I shared it with my mentees that these are sell side liquidities. Stop losses placed below the supposedly equal low or supposedly double bottom pattern. These stop losses will be raided into this zone, demand zone, and then there'll be a buy. Now, mind you, some other traders here must have placed their stop losses here, thinking this is a flag. Can you see a flag pattern? This is like a possible flag pattern. This is the first leg of the flag pattern. All right, and this is a consolidation, and there's supposedly going to be a sell-off right here by retailers. All right, and they will place their stop loss at the other side of the flag. All right, it's called the buy side. This is a buy side liquidity. So when these stop losses, these sell side liquidities are raided into this zone, these stop losses also, the sell side buy side liquidities will also be taken out by this trade. This appears to be like a flag formation. First leg sell, consolidation, and now it's supposedly another sell leg. But unknown to the retailers that this is a trap by the institutions or by the banks or by the hedge fund traders. All right, so once you learn and understand this concept, you'll be on the right side of the market most of the time. You'll be on the right side of the market. So let me come again. Some retailers are assuming that this is going to be a sell, a bearish flag pattern, place their stop loss right here, and now trying to sell the market, while others, on seeing a double bottom, would want to buy this market right here. So as you can see now, these stop losses will be raided into the zone. This sell side liquidity will be raided into the zone, and the other buy side liquidity also will be raided by the buy by institutional traders. Let us see how it played out. Can you see how it played out? Can you see how it played out? The institutions came right down, tap into the zone, just a small tap, 1 pips tap into the zone, taking out these stop losses, these sell side liquidities, stop losses taken out. And now there was a buy. The market gave a change of character right here, and there was a return to order block right here, tap into the order block, and now there was a buy. These stop losses, these buy side liquidities we are taking out. These are stop losses for retailers who are engaged in a sell trade, thinking that this is a bearish flag. You see how these stop losses, both stop losses on both sides, you are raided. So if you cannot spot the liquidity, you will become the liquidity yourself. So that is why you need to learn how to spot the liquidities, so that you can be on the right side of the market. I'm speaking this with passion. Not until I discovered this, my trading was suffering. Until I discovered this, I got into the right side of the market. Once you discover this, you'll be on the right side of the market most of the time. All right? So you can see that both stop losses, the sell side liquidities, we are taking out by this candle, this long candle. And now there was a break in market structure right here. Break in market structure, or the change of character. And now there was a retest, or what we call the return to order block. And now a sweet buy off into this zone. Sweet buy. Can you see? Let's look at the setup again. Look at the setup. Look at the setup again. All right, I said it's going to buy after the raiding of the stop losses or the sell side liquidity, and also the buy side liquidities have to be taken out also as well during the buy. And you can see that this played out perfectly. All right, so this is what I say I should share with you today. If you need more information about this, please feel free to send me a comment, to share your comment on the to make your comment on the comment section of this video. All right, so you can see here how I posted it on my mentees group. I posted this setup here. This same setup was also on EU, on GU, and also on AU. All right, I shared this setup right here on the 17th of January, and you can see how it played out. I also shared it also when it played out. I also shared it with the group. All right, so this is real. All right, this is real. It's real. So if you want me actually to mentor you, you want to become my mentee, one of my mentees, I'll do that gladly. All right, I don't believe in general mentorship. I don't mentor people in group, no, because I believe that each individual has an individual assimilation rate. So that is why I train people. I have many persons I am training, several people I'm training, and I don't train them together in a group. I train them one after another. I train them one-on-one. Okay, I take them through my course. After training them, I can now put them in the group, in my mentees group, where I share setup. But I don't train together. All right, so I train each individual together. I explain a concept to you. I give you some work to do, some exercises. You do, mark your charts, do the exercises, send me, I'll score them, and I'll make some corrections, and now you try again until you get it right. It is one-on-one mentor. You have access to me. All right, you have a personal access to me any time of the day. All right, so until you become good, I take you by the hand until you become a very good trader. I take you by the hand. Trading is possible. You can become great through trading. You can make money in trading, but you need the right training. You need the right mentorship, and that I provide. All right, I provide that. So if you need me to mentor you, after mentoring you, I'll put you in my VIP mentees group for daily charts, daily setups, high probability setups. All right, so that is it. Actually, I want to thank you so much for viewing this video. Please kindly subscribe. If you're yet to subscribe, kindly subscribe to this video, to this channel as well. Not the video, this channel. Please subscribe to this channel. Okay, like this video, subscribe to this channel, turn on the notification bell. When you turn on the notification bell, you'll be able to be alerted when new videos are uploaded. All right, so also like this video as well. Please like this video. I need your likes. Once you like the video, I know that you find it helpful, so I can be able to make more important, useful content for you. Okay, also share our video, share the video with others. So I want to help as much struggling traders as possible in order to become profitable in this business of forex trading. All right, so that's my way of giving up back to you. So till I come your way next time with another useful content, I wish you all the best. I wish you the best in your trading. Do have a wonderful day ahead. Thank you.